Welcome, guys. I want to talk about Airbnb today, specifically the IPO that's coming up. They go public on December 10th and start trading on that day. I'm excited to maybe see if I can't snag them at a reasonable price. And I've been going over some numbers, trying to figure out what a fair price might be, looking at some estimates from all the different players and the analysts out there. So I've come up with a number. I'd like to share that with you, along with my overall analysis of the business and what its prospects are go forward. Let's take a look.
You have to pay attention to your money.
So to start with, I looked at what everybody was saying, looked at some different analyst commentary and articles and news and all kinds of things. And a couple of things on Twitter really caught my eye. I love Twitter. It's so succinct at capturing some key points. I love what this person is saying. While speculators will no doubt drive momentum over fundamentals, there's still a strong story once the dust settles, which I think is so accurate. You know, too often in these IPOs, they get completely swallowed by the hype and the news cycle, which, don't get me wrong, it's happening to Airbnb. But unlike a lot of these other companies that go public before they're ready, Airbnb has a really strong set of underlying fundamentals. I think they're going to be a good business go forward. So again, once the dust settles and some of the hype disappears, we're going to see what this thing is really worth. And I think it'll be worth a reasonable number. And this one I had to pull as well because I thought it was absolutely hilarious. This guy is bang on. This is one of my few complaints about using the Airbnb platform, all these silly fees that get tacked on. And you know, I think he may not be far off in terms of his price estimate here once you tack on the inevitable hype premium that's going to be attached to this IPO. It'll be funny to see if he's pretty close to the actual number. So you have to look at growth first, I think, when you try to assess this business. And really, this more than anything else is fueling what people are willing to pay. They see a ton of growth in this business. It got some enormous growth prospects go forward. And to date, they have demonstrated that growth, right? This number is pulled from their S1 filing, and they've disclosed their nights booked and gross booking value over the last 3 years. And there's a nice, strong, steady growth period here. These are impressive numbers. They're calling attention here to the fact that there was a dip inevitably in 2020 as they got hit with the same thing that everybody in hospitality got hit by, which was a massive decrease in the business. So this period doesn't compare very well to 2019. But, you know, from a valuation standpoint, you have to understand that this is absolutely external to their business. They are coming through this in a good way, and I think that growth is set to resume. And really, the other thing to keep in mind with this is that it seems like a bit of an odd time for them to go public. Normally, a company does it at a very favorable time for their business, whereas this is a very unfavorable time. And the fact is, they are somewhat being forced to do this now. They need to raise cash in order to get through this rough patch. And they're trying to do it at a time when there's at least a good level of confidence that they will in fact come through this okay. I think everybody believes there's light at the end of the tunnel. Travel will resume, things will go back to normal, and these guys will be okay. So yeah, they're coming to the table here with a bit of a need for this cash flow. And that more than anything else suggests to me that they can be had for a pretty darn good price. They're hurting, they need the cash, and I think some of the pricing of the IPO will reflect that. I think if that wasn't the situation, we would see them come with a very sky-high, ridiculous number, and I think it's going to be moderated a good deal by their current circumstances. That's why I'm hoping they can actually be had for a pretty good number on IPO day. Now, you know, getting back to the growth story, it's not just about the actual bookings and value numbers. The listings have been growing, the revenue has been growing, and just the sheer number of users, both hosts and guests that are using the platform is reaching some very impressive numbers. That's a ton of people that are using this thing constantly. I know I use it a lot and I love it. Now, market share, you know, I think the story here is that they've already captured a very sizable chunk of the travel market. But the good news story for the future is that there's a lot of it left that they can, I think, take from the dominant players. I think they're absolutely going to start eating into the share that some of these other players have, and this gives them a lot of healthy room to grow. It's one thing to have had a growth story and have the fundamentals to fuel growth, but if the market share is not there for you to take, then it's going to be really hard to grow the business. I don't think that's a problem for Airbnb, but really you can't just look at growth. You have to look at whether they can grow profitably and whether they're going to deliver the earnings as a public company. I pulled this chart from the S1 because it caught my eye as well. A lot of people didn't realize, and I certainly didn't know until I looked at this, Airbnb has had profitable quarters in the past. They haven't achieved profitability overall yet. I think that's still a ways off, but they've absolutely had some good third quarters in all of these years. They're a seasonal business. People don't book consistently. They don't travel at the same volume consistently. The leisure travel market shuts down in the winter in North America, but they've still been able to post this strong growth, even if it is cyclical. As they say here too, there was only this dip in 2019 due to investment in infrastructure and growth as they expanded the platform. Great sign. I'd love to see companies investing in R&D and trying to step up, the business and the infrastructure in order to meet the growth. It's a really good sign that they're willing to spend that money to achieve the growth, which they're absolutely doing. In these S1 filings, they talk a lot about risk. You always have to disclose all the material risks to your business so that investors know what they're getting into. In the S1, they list all kinds of risks like you might expect. And buried in the middle of that list of risks is what I think is really the single biggest thing that is larger or more of a risk than all the others by a good deal, which is regulatory and legal risk. Airbnb has been facing a ton of issues in all of these individual jurisdictions around the world where local governments are trying to get them out or at least severely limit their access to the local markets. And this is in response to citizen complaints. It's not so much a problem between guests and hosts, although there have been a few of those. Really, the reaction from these local governments is driven by neighborhood and neighbor complaints. Nobody wants a noisy Airbnb party next door. People don't like transient guests coming and going in their neighborhoods and their neighboring buildings. They want neighbors. They don't want fly-by-night guests that they can't get to know. And more than anything, they don't like what's happening to property values. When Airbnb becomes dominant in a neighborhood, it hollows out the rental market, takes a lot of units away from the local folks that are actually looking for an affordable apartment, and it also drives up the overall cost of housing in the area. So it's a real problem. You get this artificially low vacancy rate and all the problems that come with it, but you're not getting a place for people to actually live that want to live in that city or that community. So if this continues unchecked, I think local governments could really push into Airbnb's business and make it really difficult for them to operate. This is the really, really significant risk for them. So what's the mitigation for this risk? What can Airbnb do about it, and what's actually going to happen in the future? Well, to my mind, there's two things at work here. And they're both related to money. Number one is taxation. So Airbnb knows that there is an opportunity to ease this pain, and that is all about delivering taxes to these local governments. And I think if they can do that, if they can figure out how to pay their fair share of taxes locally, I think this problem can be eased. Now, this is really important because local governments are always strapped for cash. They're always looking for money. They never have enough of it. And I think if they can see that there is an opportunity to tap a new source of tax revenue, and maybe they're going to do the work then to figure out how to change the regulations to let Airbnb operate in a particular market. And really, this has been the problem all along. You have Airbnb saying, hey, please, we want to pay taxes. And then you have these local governments saying, well, you're actually not paying your taxes. And they're actually heading to court a lot of times to fight over this. Airbnb has launched tons and tons of lawsuits against these local governments, and the opposite has happened as well. They've been sued in a lot of jurisdictions. And it's not necessarily about paying or not paying taxes. It's about how you are paying those taxes, and it's about what are the regulations and the legal frameworks that are embedded with the payment of those taxes. The problem is a lot of the regulatory framework is based on the old hospitality model of hotel operators, resort operators, and all this kind of thing where the owner has direct control over the local operation of that unit. That's not true for Airbnb. They're a platform. It's the host that has to comply with a lot of these local regulations. And Airbnb's power to force the host to do that is extremely limited. So when a local government asks Airbnb to sign up and take responsibility for all of the rules and regulations that get attached to these licenses, it's very difficult for them to sign up for that. So Airbnb is fighting aggressively in court to try to get these things changed. And it's like they say, you can't fight City Hall. It's really difficult and it's an uphill battle. Now, at the end of the day, I think that these municipal and local governments have a real incentive to figure this out with Airbnb because they know they can get at a lot of tax revenue and really help out their budgets if they can figure out a way to get this deal done. And on the other side, Airbnb knows that if they can find a way to get those taxes paid, remember, it's coming from host and guest revenue, not Airbnb's pockets necessarily, then they'll get this worked out in time. But Airbnb is taking a fairly aggressive approach to this, which worries me a little bit. I wish they could figure out a way to move forward a little bit more peacefully with these local governments. The other thing that I think is going to mitigate this risk is demand. There is incredible demand for Airbnb, both from guests and hosts. There was a really interesting article by this guy right here. I put a link to his blog, and he has this fantastic data summary that really shows the interest level in Airbnb above the major hotel brands. People want Airbnb to be in these different cities and these different neighborhoods. Hosts want to rent their apartments and guests want to stay in them. And so that's the other side of the people, I think, that are lobbying these local governments. The hosts and the guests are saying, hey, let Airbnb in. We want this business to be viable and we want it to operate in our city. So I think as that voice gets louder and these local governments listen to it, that's another way that this risk could be reduced and mitigated. So finally, let's talk value. What is Airbnb actually worth? Well, we do know that there are estimates of value from the private backers that have valued Airbnb differently throughout these rounds of private financing over the years. So these numbers have been released, and we can see a steady growth in value from 2014 up here to 2019 when it was valued privately at $38 billion. And then with the hit to their business in 2020, it was valued here at $18 billion. Although now, as we've gotten closer to the IPO, there's now talk of suddenly jumping that valuation back up. You hear numbers like 35 and now most recently 42 billion. So what's happening here is the folks that are looking to dump those shares on the open market are trying to find the right price for the business. And really at this point, they're not valuing it based on fundamentals, but they're valuing it based on what they think the market will pay. So the more interest there is, the more hype there is surrounding the IPO, the bigger this number is likely to get. If it does hold at 42, they say that that implies an IPO price of $60. I don't know what assumptions they used to come up with that valuation, but that's the number. There are alternative opinions out there. So if you survey some of the different analysts that have come up with different valuation models for how to price the company, there's two in particular that I like. One of them is more conservative, and it's based on the assumption that Airbnb's business will continue mostly the same as it is today, which would imply a 30% revenue growth year over year. It also assumes that their operating model is mostly unchanged, which means their costs will continue to scale with revenue, which is not unreasonable. And this assumes a longer path to profitability. If that happens, then the company would be worth about $29 billion in today's money. There's also a more aggressive model floating around out there amongst many analysts that assumes Airbnb will take a different approach after they go public. This would mean aggressive cost reduction and really tightening up their business. That would in turn mean a drop in revenue growth to something more modest, like a 20% growth year over year. And basically, the idea behind this is that it would be a race to profitability. The idea here is that the public market wants profitability as quickly as it can get it. If they could pull that off, the valuation might be closer to $60 billion. So these two different valuations result in different numbers. $60 billion would imply an IPO price of 85, whereas $29 billion would imply a lower range down at 41. And it's interesting that the current price based on this middle valuation is right here at $60. So I think that this is a reasonable range for Airbnb based on the fundamentals. I think if the IPO price is anywhere within these numbers, then it's not a bad price to pay. I think I'd be comfortable paying something on the lower end of this. And I love a bargain, so my strategy, as always, would be to put a lowball limit order out there and see if I can't get filled. I'd be quite happy to snag a small chunk of this at the lower end of that range. That said, it's quite possible that it's going to open much, much higher than this. The news cycle and the hype surrounding this one is really, really significant, and I think that could drive a meteoric rise in price. We've seen that on some similar IPOs. So if that happens, I think I would take a pass. I'm not comfortable with paying that much of a premium. even though it could absolutely be the case that it will open at a much higher number and keep on moving from there, in which case I'll have lost out, and that's fine by me. So guys, that's it for me. I hope this helps. This is how I'm going to approach this one. Let me know in the comments if you're going to buy and what price you'd be willing to pay. If you like the video, give it a thumbs up, hit the subscribe button, ring the bell, and I'll see you on the next one.